Hey guys, let's look at the 1959 letter that Warren Buffett wrote to his limited partners. This is from his Buffett Partnership days. He starts off by talking about the general market. He discusses how the overall gain of the Dow Jones Industrial Average was about 20%, and that despite this indication of robust market, more stocks declined than advanced in the New York Stock Exchange, which is similar to what we're seeing in 2020, where we have more stocks, more sectors that are declining, and we have only tech, which is advancing, and it looks like tech is offsetting everything in 2020. So similar situation back in 1959 where more stocks were down than up, yet the Dow Jones Industrial Average ended up higher. Next, he talks about how he has been apprehensive about the general stock market levels for years now, and that the present level of blue chip security prices contain a substantial speculative component with a corresponding risk of loss. Buffett then talks about how maybe the standards for valuations are changing. However, he says, I would rather sustain the penalties resulting from overconservatism than face the consequences of error, perhaps with permanent capital loss resulting from the adoption of new era philosophy where trees really do grow to the sky. What he's saying here is that he'd rather not lose money. He'd rather be on the safe side than on the risky side of things. So this goes back to his one and only rule, which is to not lose money. As far as the Buffett partnership results for 1959 goes, he says that the six partnerships averaged a return of 25.9%, which is superior to the Dow Jones Industrial Average, which returned an overall gain of 19.9%. Next, he talks about how the gain was computed, which is he looks at the market value at the beginning of the year and compares it to the end of the year. He then talks about the expenses in his portfolio. Next, he talks about the present portfolio condition. He discusses how there is an investment which comprises about 35% of the overall assets. So it is a pretty concentrated portfolio. He says our investment was made and is carried at a substantial discount from asset value based on market value of their securities and a conservative appraisal of the operating business. So he's saying that he is getting into an undervalued security with a greater margin of safety. He then says, I continue to invest in securities at least partially insulated from the behavior of the general market. This goes to show that he wants to make sure that the portfolio outperforms during bear markets. And that is all that there was in this 1959 letter. Let's look at the key takeaways. The first one, even though more stocks decline than advance, overall stock market can still be higher. Second, stick to your principles. The goal is to not lose money. Third, it is fine to have a concentrated portfolio if you are fairly certain of the outcome. And lastly, invest in companies that you understand and can withstand the turbulent market conditions, possibly companies with a moat. And those were the key takeaways for the 1959 letter. Please do like, share, and subscribe to my channel. Thank you.